Hi, everybody. This is Peter Schiff. It is Thursday, November 8th, 2012. Well, the presidential elections are over, and unfortunately, President Obama was reelected to another 4 years. Also, with the exception of maybe some minor cosmetic changes, we pretty much have the same Senate and the same House of Representatives today that we had before the election. So with the same executive, the same legislature, really nothing is going to change. And the real crash is staring us right in the face. In fact, I think what really saved President Obama, what really helped him get reelected to a second term, despite how bad the economy is the fact that people perceive that the economy in Europe is even worse. In fact, President Obama really needs to thank the Greek voters for his reelection, not the American voters. Because if Greece hadn't voted themselves into bankruptcy, I think that our crash would have already occurred. But because the European situation blew up first, investors from all around the world have flocked into U.S. Treasuries as a safe haven, despite the fact that I think U.S. debt is even riskier than European debt because the dollar is still the reserve currency, although that role is diminishing. It is still thought of as a safe haven, and a lot of money went to the dollar and to our bond market that might otherwise not have were it not for the problems in Europe. And that's what enabled the Federal Reserve to print a lot of money without causing prices to rise even faster than they did. It enabled the government to go deeper into debt without causing interest rates to rise. And it basically bought President Obama another term, because we were able to take all this cheap money and go out and spend it and buy more stuff we couldn't afford with money we didn't have. And so Americans felt better than the economic reality would have otherwise dictated, because we had the benefit of all this cheap money. Of course, it comes with a lot of strings attached, because whatever we borrow today, we have to pay back, or more likely repudiate or inflate away in the future. But I don't think Obama is going to get out of Dodge. I don't think he's going to finish his second term without that crisis. Sometime during the next 4 years, probably sooner rather than later, there's going to be some kind of resolution of the European problem, one way or another. But once it is resolved, the world's attention and the world capital markets will refocus on the much bigger fiscal problem here in America. And I think it's ironic. You can credit Greece for President Obama's reelection, and Greece is going broke, or is broke, because they pursued the very economic policies that Obama advocates that we adopt. I think it's kind of ironic. But Obama constantly complained during the campaign about what a lousy economy he inherited from Bush. And that's maybe one of the only things Obama actually said that was true. He did inherit a lousy economy. The fact that he's helping to make it worse is beside the point, and the fact that he's pursuing the same lousy policies of his predecessors is also beside the point. But the point was, he did inherit a lousy economy. But if Obama thought the economy he inherited was lousy, wait till you see how lousy the economy is going to be that Obama's successor inherits, because it's going to be much worse. The economy, when Obama finishes his first term, is going to be in much worse shape than it was when he began his first term. Now, a lot of people think, well, how can that be? I mean, he came into office, in the middle of a financial crisis. Nothing could be as bad as it was in late 08 or early 09. Oh, yes, it can. Because what we're going to have during Obama's second term is going to be much worse than a credit crisis or just a bursting of a housing bubble. This is going to be a currency crisis. This is going to be a sovereign debt crisis. This is going to be where the people who lose the most are the people who think they played it the safest. The people who have treasuries, who have muni bonds, high-quality corporate bonds, even people who have money stuffed under their mattress, because inflation is going to wipe them out. It's interesting that now that the election is over, the media is focused on the fiscal cliff that we are approaching. And will our politicians work together to avoid this disaster? as if all we have to do is cancel the so-called spending cuts, cancel the tax increases, and everything is going to be great. That the problem is that we're going to go over this fiscal cliff. That's not the problem. The fiscal cliff is part of the solution to the problem. The problem is the massive debt. The only way to get rid of the debt is to go over some kind of fiscal cliff. We have to dramatically cut government spending, or we have to raise taxes. I think we're much better off cutting spending, but we have to do one or the other, or a combination of both eventually. And the longer we wait to do it, the bigger the cliff we're going to have to go over. And of course, unfortunately, if the only taxes that we end up raising are the taxes on the entrepreneurs, on the businessmen, on upper income people, and we end up taxing the money that they would have used to invest in growing the economy, in providing capital, in creating jobs, if that's the money that if that's the tax revenue that we get, we're actually going to end up getting less revenue despite the fact that we need higher taxes. The truth of the matter is, if we're going to do something about the deficits with higher taxes, we have to tax the middle class. We have to tax consumption. We can't tax savings and investment because we need more of that if we're going to get economic growth. But the reality is, it's not avoiding the fiscal cliff that we need, it's going over it. And we're not going to solve the problems by not going over that cliff, because if we don't go over that cliff, we're guaranteed to go over an even bigger cliff down the road. I mean, if you buy into the idea that reducing government spending is going to hurt the economy, if you believe that, well, then we're going to have to reduce it a lot more if we don't go over this cliff, because the deficits are going to be that much bigger. And when we ultimately have our Greek moment, when we have the real crash, when we have a sovereign debt crisis, a currency crisis, because the world won't lend us any more money, we run out of credit, the world wakes up to this con game, and they no longer have confidence in our ability to repay debts that we clearly lack the ability to repay. Remember, a few years ago, everybody was willing to loan money to the Greek government. Even though they were already broke, they were still able to borrow at record low rates until their creditors woke up and realized how foolish they were. Well, the same mistakes are being made by America's creditors, and we're going to have a similar crisis. The only difference is the Greeks can't print and we can, but that's a distinction without a difference, because default is still default whether you legitimately refuse to pay or if you pay with inflated dollars, if you just print money and repudiate your debts through inflation. And I think that is the direction in which we're headed. Now, what does this mean for the markets? What should you do with your money? Well, first of all, the stock market already voted. The Dow Jones was down better than 300 points the day after the election. So as soon as the market knew the results, the Dow dropped better than 300 points. Now, that wasn't a record for a stock market drop after the results of an election. Obama already had that record. The biggest drop in a day after a presidential election was 4 years ago when Obama was elected to the first term. The Dow dropped about 5%. Now, of course, we were in the middle of a financial crisis back then, so 5% daily drops were kind of routine during those months of November in 2008. But the drop on Tuesday was pretty significant, and the market still technically looks weak. And some people want to blame the decline on Europe. Look, we got problems in Europe every day. This was a bigger than ordinary decline, and it happened for a reason. Remember, 4 more years of Obama means that we're probably going to have higher taxes on corporations, one way or another. Either the corporate tax is going to be hiked, the official corporate rate, which is now 35%, or corporate income is going to be taxed at the individual level with a higher tax on corporate dividends and or a higher capital gains tax. But either way, the effective tax rate on corporate income is going to go up during Obama's term. Well, what does that mean for the value of stocks? Well, they have to go down, because a stock represents the discounted future cash flows of its after-tax earnings. And if after-tax earnings are diminished because taxes are higher, then by definition, stocks are less valuable, and they need to be marked down to reflect that. And that is what the market has begun to do. And I think the stock market in the near term looks pretty weak. Now, I don't think the market's going to crash, at least not in real terms, because the weaker U.S. economy guarantees more inflation. The Fed is going to continue to stimulate the economy by printing money. The dollar is going to continue to be destroyed in terms of real purchasing power, and that will put a floor beneath nominal stock prices. But of course, whatever those nominal stock prices are going to be, they will be lower than they would have been had corporate tax rates not increased. So because their taxes are going to be higher, the value of those stocks is going to be lower, even if ultimately the nominal price of stocks does go up. But the only reason that I think you're going to see higher stock prices is not because the stocks themselves are more valuable, but the money that people use to buy the stocks will be less valuable, and so prices will rise. But it's purely going to be the result of inflation. Given that, U.S. stocks are not the place to be, although if you have to buy U.S. stocks, there are some U.S. stocks that will do much better in the environment that I envision than others. But I think the best thing to do is to get out of Dodge, avoid the market in the U.S. if you can, and look for greener pastures abroad. In fact, over the course of the past couple of weeks, we are seeing a bit of a decoupling, particularly in some of the Asian and emerging markets, which have been rising even as the U.S. market has been falling. Of course, the dollar hasn't really started to tank yet because people are still focused on the European problems. But the interesting fact is the euro's not tanking either, at least not against the dollar. So I do believe that the dollar is biding some time here. It's got a little bit of a reprieve because people are still more focused right now on Europe, but that will pass. And as the world begins to appreciate what 4 more years of Obama actually means for our net financial position, for our national debt, for our economy, they're going to start selling dollars, and the dollar is going to tank. Gold, on the other hand, has already started to rise. It was down slightly on the day following the election, but that's because it rose about $35 the day before the election. I think it's already begun to rise as I'm recording now. It's up about $10 after being down earlier this morning. But I think it makes a lot of sense to be buying gold as a result of what's happened. Silver, I think the world is going to appreciate, not just in America, but all around the world, how a weak dollar policy is going to benefit precious metals. And of course, it's not just America that's making these monetary mistakes. They're being made in smaller degrees, but they're still being made in countries all around the world. So I think for a lot of people, not just Americans, gold and silver represent an excellent safe haven. And I think that right now it may be a little bit of a lull before the storm as people really start to digest what this means. Because for a while there were people who were thinking that Romney was going to win. I mean, for a while it was maybe 50-50. There were a lot of people who were optimistic that maybe Romney was going to win. And had Romney won, I think there would have been a sense of optimism. It would have been false optimism because I don't believe Romney would have actually done what was necessary. But nevertheless, people might have had some hope. Now there's nothing to hope for. We got 4 more years of Obama, and the pessimism has really yet to sink in. When it does, then I think you're going to see a much bigger reaction upwards in the precious metals market. And so you want to make sure and position yourself before that. One final thing, though, I do want to mention. A reason that I preferred Romney over Obama, apart from the fact that it would at least be encouraging to see our country have the good sense to at least reject another term for Obama. Unfortunately, that didn't happen. But my other reason was that I thought that after we had the real crash, which is certainly coming in my opinion, and I think it's going to happen in this second Obama term, that Romney potentially might have been able to be persuaded to do the right thing, to maybe finally abandon these big government policies of the past and embrace a true free market agenda and allow the market to restore what the government destroyed and go back to the principles that made this country great. There is absolutely no chance that Obama is going to do that because the principles he believes in are not the ones that the country was founded on. I mean, maybe they're the ones that Cuba was founded on or the old Soviet Union, but not the United States. And Obama is going to see this economic crisis that's coming on his watch as vindication of his beliefs that the free market doesn't work anyway. And it's going to give him an excuse to implement even greater government control over our economy, to try in his mind to fix the problems with capitalism, to have more central government planning, to have the government determine more where resources are allocated, who does what, micromanage the economy from Washington, D.C., because he's going to see this disaster and attribute it to capitalism and to greed. And what that means is that everything that the Obama administration is going to do in response to this crisis is going to make it worse, which means it's going to be a complete, unmitigated disaster by the end of his second term. So it is very important that people prepare for this and position themselves accordingly. And remember, I think the only reason that we didn't already have this crash during Obama's first term was because we were upstaged by the problems in Europe. But believe me, as bad as it is in Europe, it's worse here. And when the curtain closes on the European fiasco and it opens wide on what's going on here in the United States, we're going to have that crash. Maybe it saved Obama. It gave him a second term. But believe me, it's going to be much worse coming in his second term than it would have had it come in his first, because we have all these extra years where we accumulated all this additional debt. And instead of addressing the fundamental problems that underlie our economy sooner, we postponed it. And we're going to have to do that later, not in Obama's term, but in the term of whoever follows him. Anyway, that's all for now. And don't forget, I comment a lot more about the politics involved in the elections and on day-to-day events on my radio show. You can watch it at shiftradio.com. So don't forget, tune in every day, 10 a.m. to noon, Monday through Friday Eastern Time, or you can listen to the radio show delayed anytime you want. But you get much more frequent updates and for much longer time periods on the radio show than in this video blog. Bye for now.